Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq, coming to you live from Exchange in Miami. Joining me for this segment, we have Ed Rosenberg with Texas Capital. We're here to discuss an ETF that invests within the Texas economy and how investors can get exposure to it. And it's great to have you with us. Welcome to Trade Talks.
Thank you for having me.
You got it. Why invest in the Texas economy?
So if you think about Texas, it's got very advantageous rules for people. State taxes are very advantageous. There's no state income tax on either corporations or individuals. It's the fastest growing state in the economy. It's been that way for 10 plus years and almost 20 in the union. Most people don't think of a state as a driver for revenue for companies, but if you're not paying taxes, the economy's growing. It's the #1 exporter in the US. As a state, no one thinks of that. If you think about it, it doesn't have as big a coast nearly as California, but yet it's still the #1 exporter. And so the Texas economy is growing fast, and this fund allows you to take advantage of it.
Right, and well, it's also business friendly, which is why you have companies going. I mean, we were talking about it off camera, but you know, Chicago, San Francisco, New York, you're seeing them move to more business friendly, tax friendly states for the reason.
Absolutely, in droves, people
right.
and companies, right? If you think about like just the cost of living alone in the state of Texas, it's significantly lower than California, in both LA, San Francisco, Chicago, or New York. I mean, you can get a 1-bedroom in a really nice area for under $2,000, which is unheard of in those other states. You have tons of schools there, D1 from Texas Tech, UT, right, Baylor, all across the state, and those students that are coming there want to stay. And so you have a workforce that you don't have to pay as much. They want to stay there because it's sunny, first off. I know California's sunny, but it's a sunny state, and people want to be around that environment, and an environment where you can kind of go out, get a job, be well paid, but companies don't have to overpay you to come there. You're already there and want to stay. And so there's a million factors, and it's an amazingly business-friendly state the way they're set up. We have companies moving there constantly, right? We talked about it a little off camera, but you had, AT&T from New York. You had Cisco from California in the past. You had Caterpillar out of Illinois. They're moving there as large companies for the business-friendly economy. Well, if large companies want it, there's a real benefit to small cap.
Well, let's talk about that. Why launch a fund that tracks small cap companies in Texas?
So because of the business friendly economy, one of the things small cap companies need is to keep their revenues, to keep reinvesting in the business. If you're paying it out in taxes, if you're paying out in higher wages, or if you're paying it out in higher rents for your offices, you're losing that revenue. If you can keep it in and reinvest in your product, and keep reinventing yourself, expanding, whether it's just going from more states in the US or expanding overseas, right? I was going to say overseas, but Mexico is just a border cross, but even going into Mexico, you have the opportunity to keep that revenue to expand in your business and continue to grow it, which other states you can't do that in. Quite frankly, because you're being taxed when the rents are higher, you're spending, even on the workforce, you don't have to pay them as much to live in Texas as you do other states.
What's an example of a company within the fund?
So the largest company is Howard Hughes.
Right.
The second largest is AMN, right? Now these aren't household names, although people have heard the name Howard Hughes forever. But when you think about the way we're set up, it's designed to take advantage of the Texas economy. So it's weighted by GDP. So each sector is weighted by GDP, their contribution to the economy, not past performance, like 5-7 years ago, but what you did last quarter. So that it's showing the impact on the Texas economy and moving forward.
And to wrap up here, what kind of investor do you see this kind of fund being appealing to?
So you think of this typical small cap investor, Russell 1000, MSCI's small cap index, CRISP, any of them, right? You're trying to take advantage of growth opportunities within the small cap space. That's the type of investor we're looking for. The investor that actually views Texas and a business-friendly economy as a driver because they can keep those revenues in the company, help grow the business faster than other states. I mean, truthfully, Jill, there's 1.8 million small businesses throughout the state. Any one of those could start coming public and get added to this index within the next quarter, because we do reconstitute every quarter. So for that investor who really wants to take advantage of a growth opportunity within a small cap blend space, that's who should target looking for this.
I'd appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Exchange. I'm Jill Malandrino, global markets reporter at Nasdaq.